You're listening to chartingwealth.com. It is great to have you with us today. You have to expect occasional losses. Why? Because the market is the market, and the market's going to do what it wants to do, no matter what on some occasions the charts say, no matter what the experts say, no matter what you think should happen, the market's going to do what it wants to do. You can expect losses. You do not want them to happen often. If you start having one bad trade, one bad purchase after another, after another, after another, you're doing something wrong. You need to stop and reassess. You are expected to do the right thing 100% of the time. But when things don't go your way, it's important to analyze what happened, to go back and see what occurred. Why did you get in too late? Why did you get in too early? Just what happened. And sometimes you can just write that off. Now, many times, if you are in the summertime trading zone, where all the volume leaves in May, as the old saying, sell in May and go away, and it's choppy, it's hard to find trades, maybe you just shouldn't be trading during that time of year. If you're in the fall-winter trading zone, you're in the right time of year, you're in the right cycles, you're following your stock trader's almanac for that year, you're making sure that you're doing everything, your MACD's crossing about the same time your derivative oscillators switching over, you've got your candles pushing up, hitting no resistance, everything's looking great, you're making all the right moves and things still go wrong, you can expect that. That will happen. Something crazy can occur, unexpected. And if that happens, that happens. But again, if you're looking at the market indexes or gold, you're following us every day. It's the right time of year. Everything's setting up. Hopefully, all of it's going to go right. Now, what if things do go wrong? Well, you need to close your trade. You need to close your position. You need to sell and take your small loss so that you don't have big, big catastrophic losses, and then see everything that you'd worked so hard over the prior months go down the drain. All of your investments and purchases will not work, and you have to recognize that it's not working and close it. You need to expect your purchase when you get in and purchase a stock or particularly an index, an ETF, gold, whatever it might be. You should expect it to move in the right direction. But if it's not moving in the right direction, you need to get out. And you'll hear a lot of people who've been in the stock market a long time will tell you your first loss is your best loss. And by that, they mean that it's your lowest loss. If you think that you can stay in and watch it go further and further down, hoping beyond hope that it's going to turn around and you're going to get the money back, you will many, many times over find that if you had just gotten out when you'd lost a couple of percent, you would have been so much better off than the 10, 15, 20, 30, who knows what losses you incur. So your best loss is typically your first loss. Now again, you want to make sure that you obey the rules, that you're not just pulling out immediately because there's a bit of a changeover. You're looking at your big chart. That is typically the 2-day chart. You're looking at your 4-hour chart. You're seeing if your trend line's been violated, what your candles are telling you, but you're not reading into things. You don't ever want to read into a situation things that are not there. So it's very important. Just every day, look at your charts, follow along with us. Let's see what's going on. Please remember, we do not, I'll say it again, we do not give market advice. We are simply giving out education. We are looking at what we see. In no way do we give advice. Do we tell you when to buy, tell you when to sell? We just look at what's going on. Never guarantee that what we think or say is where the market is going to go, because the market's going to go where the market's going to go. You want to make sure that you're following it, and that if you're following it and it's going in the right way, great, this is exactly what you wanted. If it's not doing what you think it should be doing and what you're planning on it doing, then you're the one who has to change your position, because the market is not going to change for you. Thanks so much. Expect occasional losses, but never get used to them. Always expect them to hurt. But again, don't let them be catastrophic. Recover from them and continue to move ahead. Good trading, good investing. Thanks so much for listening. Again, chartingwealth.com. We love to hear your comments and feedback. Thanks so much.